Today I'm going to go over certain risks and issues around 401k plans. Specifically, I want to differentiate between two common coverage forms in this space, Fidelity and Fiduciary, and answer the questions of whether an employer with a 401k plan needs fiduciary liability insurance. Let's start off with Fidelity, which is often called a Fidelity Bond or an ERISA Bond. Anyone who handles planned funds must be covered by a Fidelity or ERISA Bond. That bond is there to protect the fund from depletion of money and securities due to the fraudulent or dishonest acts of the trustees and others with access to plan assets. Your ERISA coverage may be a standalone policy or a bond, or it may be bundled with other crime insurance coverages on a commercial crime policy. ERISA mandates that 10% of plan assets are protected by an ERISA or Fidelity bond up to a maximum of $500,000. Unless there's company stock held within your plan, then the max is $1 million. Okay, now on to fiduciary. And the first question, is a Fidelity bond or Fidelity insurance the same as fiduciary insurance? The answer is no. These are two entirely different coverage forms. But if you are an employer or a trustee of a plan and are purchasing Fidelity ERISA coverage, you should be considering fiduciary liability insurance protection as well. And here's why. Fiduciary insurance protects the plan trustees, who are often the employer or owner of the company, from claims which can arise alleging breaches of your fiduciary duties as defined by ERISA. The 401k plan trustees are responsible for managing the plan in a prudent manner in the best interest of the employees or the participants of the plan. This includes selecting the right service providers, investment options, investment platforms, third-party administrators, record keepers, etc., and that the costs of all those providers are reasonable and competitive. ERISA also mandates that there is a reliable record-keeping system in place and that required documentation is distributed to participating employees regularly. Failure to be prudent or to not review all service providers on a regular basis can lead to legal liability for the plan trustees. The important point here is that the trustees, as I mentioned, often is the employer, and they can be held or sued personally under ERISA. The bad news is that no other policy form you may have other than fiduciary liability will cover the trustees for these types of lawsuits. Not your general liability insurance, not your D&O insurance, not your homeowner's insurance, and not even your personal umbrella policy. This is why fiduciary liability is critically important for many employers. Why is fiduciary liability coverage needed? Well, for a couple of reasons. The first I just mentioned, none of your other policies will cover the trustees if a claim arises, so you'll be out of pocket paying these claims if something happens. The second and most important reason is that fiduciary lawsuits have been on the rise for the past 2 years. In fact, in 2020, we saw fiduciary class action filings jump 5-fold. These suits often arise over excessive fees, which is driven by law firms that can target employers based on publicly available information. And these suits are expensive to defend against and settle. Employers, large and small, meaning firms under $1 million in plan assets, can be and are targeted. How much does fiduciary liability insurance cost? Typically, fiduciary liability is added to a management liability policy which provides D&O coverage and in many cases employment practice liability coverage as well. I often call the fiduciary policy or fiduciary coverage the third leg of the management liability stool. It helps round out the protection for the executive suite. The cost used to be about 5 to 10% of the D&O premiums, roughly speaking, but today, due to increased litigation around fiduciary, it's no longer priced as an add-on to the management policy. Instead, it's priced based on plan assets and many other factors and can be more in the range of 10 to 20% of the D&O premiums. What if you don't purchase D&O or management liability? What's the pricing? Well, hard to say because, as I mentioned, it's really priced on plan assets, the size of your company, and other underwriting factors. But for most small and medium-sized business, a $1 million standalone fiduciary liability policy is going to run somewhere between $500 to $2,500. To wrap it up, if your firm has a 401k plan, the trustees, who are often company owners and leaders, have personal liability for potential lawsuits that can arise from alleged breaches of fiduciary duty under ERISA. Because these lawsuits are becoming more frequent and increasing in dollar severity, this poses a real threat to company leaders. And because no other insurance policy covers claims of this nature, it makes the need for fiduciary insurance all the more important. Have other questions I didn't answer here? Want to learn more about fiduciary liability insurance, or in fact any other form of business insurance? Give me a call or drop me an email. My contact info is coming right up, and there's a link in the description box below where you can book time on my calendar for a conversation. Thanks a lot.